Hello and welcome to my teaching demonstration. My name is Travis Christensen and I am here to do a quick introduction to cash flows. So first of all, cash flows are one of the main financial statements that are required by FASB for companies' SEC filings. So the cash flow statement, the statement of earnings, the balance sheet, statement of stockholders' equity, all of these things are required by a publicly traded company. So, what is on the cash flow statement? Inflows and outflows of cash, right? Cash and these things that are called cash equivalents. So what is a cash equivalent? Well, basically, a cash equivalent is an investment that is so liquid that is going to mature within 3 months. So let's say, for example, I have an investment and it's 3 months from the date of purchase. So let's say I have an investment that I purchased on January 1st, 2016. Okay? The investment is scheduled to mature on December 31st, 2016. Today is November 1st, 2016. Is this a cash equivalent? All right. No, because it's 3 months from the date of purchase. Example 2. I sell the same investment to my friend John on November 30th. So I sell the investment to John. The investment still matures on December 31st. Is this a cash equivalent? Yes. It's a cash equivalent because it is 3 months, because it matures less than 3 months from the date of purchase. How would this be recorded? Debit cash, credit cash, those two would cancel each other out. It would show up as cash on the balance sheet. All right, so like we said before, what goes on the cash flow statement? Something that makes you popular, get your friends, get your dates. Cash, right? So we're going to look at our beginning balance sheet, because cash is on the balance sheet, right? It's listed as a current asset on the balance sheet. I'm going to look at my beginning cash, January 1st. Let's say, for example, it's 100. And then I'm going to look at my December 31st balance sheet. That's going to be my ending cash. Let's say, in this case, it is 150. So, my beginning cash is 100. My ending cash is 150. What is my total change in cash? 50. All right, so this 50 can come from one of 3 different places. It can either come from operating activities, investing activities, and financing activities. So, these inflows of cash can come from one of 3 places. The cash flow statement is the most honest of the financial statements. It is also the newest of the financial statements. It was invented in the 80s. So, FASB very clearly defines what an investing activity is and what a financing activity is. So it's not an investing activity or a financing activity, it's an operating activity. So an operating activity basically answers the question, why are we here? Why are we in business? So it includes all of the things that are part of a company's normal course of operations. So this includes things like accounts receivable, accounts payable, taxes payable, dividends receivable, cost of goods sold, inventory. All of these things, cash coming from these things are all part of your operating activities. Investing activities are, I like to use the mnemonic or memory aid when to remember investing activities. LIP. LIP stands for loans, investments, and PP&E. Loans, investments, and PP&E. So, this isn't money that we're borrowing, but this is money that we're lending to other people. Okay? So, this is going to be all of our notes receivable, all of our long-term lending. Investments, that's when a company buys stock in another company. You know, you have a bunch of cash lying around, you can put it inside of your bank and get 0.10% interest, or you could invest it in stock and hopefully get a nice return, unless it's 2016. Okay. And finally, PP&E, think of this like we're investing in ourselves. So we're buying plants, which are buildings, property, which is land, or equipment, those little machines that are inside of your company that you use to manufacture finished goods. So think of it as an investment in yourself. So please remember, don't give me any lip. Finally, financing activities. These include all of our long-term borrowing, different ways of bringing money into the business. So this is going to be all of our capital stock, our additional paid-in capital, dividends payable. Dividends receivable are part of operating, be careful. Dividends payable are part of financing activities under GAAP. Preferred stock, common stock, additional paid-in capital. All of these things are part of financing activities. All right? And if you can't remember where something on the cash flow statement goes, just think of your GAAP balance sheet. You know, you have your current assets, your current liabilities, your non-current assets, your non-current liabilities, and your owner's equity. If it's a current asset or a current liability, it is most likely in operating activity. If it's a non-current asset, it is generally going to be an investing activity. And if it's a non-current liability or an owner's equity, that's almost always going to be a financing activity. It doesn't always work, but if you can't really remember where something goes on the cash flow statement, you can kind of use this as a cheat sheet. All right? Okay, so thank you very much for listening. I hope it was helpful. Have a great day. Bye-bye.